Central banks, the mysterious wizards of the financial world. They don't sell iPhones, they don't make cars, they don't even have a cool logo. And yet, they control the entire economy with a single move of their wand. Or should I say, interest rate. Let's start with the basics. Every country has a central bank. America has the Federal Reserve, Europe has the ECB, Japan has, well, endless optimism and a printer that never sleeps. What do they actually do? Their job is to keep the economy stable, which basically means stop inflation from getting out of control, stop unemployment from getting out of control, stop everyone from panicking too much. Simple, right? Except the only tool they really have is, drumroll please, interest rates. If the economy is slow, they cut rates. That makes borrowing cheap. Suddenly everyone's like, sheer, let's buy 3 houses, a new Tesla, and maybe fund a llama farm. If the economy is too hot, they raise rates. Suddenly borrowing is expensive. Everyone's like, never mind, guess I'll just stay home and eat ramen. It's like controlling the world with a giant thermostat. Too cold? Turn it up. Too hot? Turn it down. Except instead of temperature, it's your mortgage payment. Now, here's where it gets fun. When things really go bad, like 2008 or 2020, central banks pull out their secret weapon, the money printer. Technically, it's called quantitative easing, but let's be real. It's just printing money. They buy bonds, they pump cash into the system, and suddenly there's fresh money sloshing around everywhere like a busted fire hydrant. And when that happens, stocks go up, housing goes up, Bitcoin goes up, your rent definitely goes up. The only thing that doesn't go up is your salary. Now here's the wildest part. Central banks can literally create money out of thin air. Click, type, boom, $1 trillion appears on a screen. Meanwhile, you can't even get your bank to approve a $500 overdraft. But with great power comes hilarious consequences. Because when you print too much money, you get inflation. Suddenly, your grocery bill looks like the national debt. Eggs cost as much as concert tickets. And one day you wake up in Argentina. But central banks don't stop there. They also act as the lender of last resort, which means whenever banks mess up, central banks swoop in like helicopter parents. Oh, you crashed the entire global economy? Don't worry, sweetie, here's a bailout. And people wonder why bankers never learn. Now let's not forget the real power here. Central bank press conferences, one guy in a suit, Jerome Powell, Christine Lagarde, whoever, walks up to a microphone, says one sentence, and the entire stock market either jumps for joy or has a heart attack. It's like financial ASMR. So to summarize, central banks are the gods of money. They can raise rates, cut rates, and print infinite cash with a keystroke. They don't answer to voters. They don't sell products. But they decide whether you're thriving or eating instant noodles until 2040. And the craziest part? Nobody elected them. They're just there, the quiet bosses of the financial universe. So next time you hear the Fed is meeting this week, remember, that's not just boring news. That's the fate of your wallet, your mortgage, your retirement, and maybe even your avocado toast. Money printer go brrr, and your life goes with it.